What's up, man? Have you ever wanted to or dreamed about placing a trade right before you go to sleep and then waking up that next morning 90 to 100 pips in profit? Of course you have. So has every other trader in the world, and that's exactly what happened to us last night. And in this video, what I want to do is show you a strategy you can implement into your own trading, show you a process you can do in order to make that happen for your own trading as well, so you can look at charts at night before going to sleep, place a trade, wake up in the morning, possibly in profit. Because no, of course it doesn't work out every single time. Every strategy has losses, but if you want to hear the process that I used in order to be up 100 pips in this morning after placing the trade last night, then stay through this entire video. Click that like button, make sure you're subscribed here to the trading channel, and I'll see you directly after the intro. Welcome back, traders. Let's jump right into the pound Swiss right now. So the first step in our trading process, as almost always with a trend continuation strategy, is to define some rules to let us know that a certain market is in trend. The pound Swiss, the first part of our process, is to make sure the pound Swiss is in trend. And what this is going to be is a trend continuation process for you to make money while you sleep. And we're going to go over all the rules for this process throughout the video, but let me quickly go over how we're defining trend, just in case you're not quite familiar with this type of trading. So in this case, how we're going to define trend is that we need the lowest low to be broken. For this specific case is a downtrend, so we would need that low to be broken. And something that's important that I get often is that what if we have a situation like this and then we break that low? Does that mean we're in trend continuation? No. If we break this little low, that does not mean we're in trend continuation. We're looking for the lowest low to be broken. And in an uptrend example, just really quickly going over this, it's the same exact thing. So right here, we would be in trend continuation with our 1, 2, 3 move. If we get a situation like this, just because we're breaking these little levels in here does not mean that we're in a downtrend. We're not in a downtrend until we break the lowest low before the break of resistance here, and we're not back in an uptrend or in trend continuation just because we break this little level of resistance. We need to see the market break and close above this highest level of resistance in order to give us a trend continuation outlook on the market and give us an opportunity to look for that pullback. And that's what we're going to be waiting on. That's what we're looking at in terms of trend, and that's how we're avoiding the noise in the market of these little pullbacks up and down. So that's going to be trend. That's going to be the first step of the process of trading overnight and making money by the morning, is to look for a trending market with those defined rules. So here we are on the 4-hour chart of the pound Swiss, and this is actually more of a day trading strategy, and this is actually done not on a 4-hour chart. We're going to place the trade on a 1-hour chart, and that's where we place this trade. But looking at the trend of this market, let's go ahead and scroll out just a bit so you can see this a little bit better. As you can see, the market was pushing down here, pushing back up. We're breaking that low. Okay, once we've broken that low, we cannot see the market break above this high, and we want to see a break and close below this low for us to be in trend continuation. And that's exactly what happens right here. We break below that low. Perfect. Now we know we're in a downtrend still. Since we're still in this downtrend, what we normally want to see, and this is what we're going to be looking for at night before we go to bed, if we want to make money overnight, if we want to try to make these profits happen overnight, we're going to be looking for a very powerful level in the market, which is always in trending markets, the previous level of structure support if we're in a downtrend. So we're in a downtrend. Here's the previous level of structure support, our little zone here. As you see, the market, when trending, pushes up to this level. Then what happens? We push back down. Now, the reason we traded this last night is because we had the same exact situation, right? Last night we were looking at this and we were in this area. We know we had just broken and closed below on our 4-hour chart. We had just got into a trending situation based on our rules. So rule number 1, we want to be in a trending situation. We wanted to see this market pull back to what? Our red zone right here indicates our previous level of structure support that was just broken. Since this level was just broken as support in a downtrend, it's likely that it turns into resistance. Now, this is not 100% accurate. It doesn't always turn into resistance, and nothing in trading is ever going to be 100% accurate. What this does is gives us a statistic advantage. So we have this advantage of knowing that it's likely, more likely than not, that the market, if it's going to continue trending, is going to use this level of support as resistance now since we're in this downtrend. So we're looking at this level and our exact, I'm going to explain the exact entry reason, the stop and target placement. I'm going to explain everything in this video so you have all these tools in your arsenal to be able to place trades and make pips overnight as well. And right here in this specific case, we pull up into this area. And once we do, let me zoom in here. Once we get into this area, what I do personally is I either look for a very significant candlestick pattern, or I look for a price action pattern on a lower time frame. What are price action patterns and what's a candlestick pattern? What's the difference? A candlestick pattern would be something like a shooting star in this case, right? That would be a candlestick pattern. Whereas a price action pattern, the difference between the two would be something more like a double top scenario like this. So what I'm looking for is either a price action pattern on a lower time frame or a candlestick pattern on a higher time frame. Now in this specific scenario, what we ended up getting is a 1 hour double top in this area. So let's go down to the 1 hour chart. Remember, we have our other types, our other parts of this process already completed. We've already checked to see that the market's in trend. We've already checked to see that we've pulled back into our area of structure, the previous one that was broken. Now it's time to drop down to lower time frames or to look on this time frame for a specific entry reason, then have specific stops and targets. And the reason we need all of this, let's just break this down for a second as well, because this video is not only about strategies. I want to give you practical steps to building a trading system and creating a trading plan on your own, because without that, no matter how many strategies you learn, you will not be successful at trading. So in this case, what we're doing is defining an entry reason. Let's say you only want to trade double tops on lower time frames in these zones. That becomes your trading system, and the power of that is that you can take and test it through historical data, which I'm going to go over here in just a second. But what you're going to do, test it in historical data, has a bit of a difference than a normal strategy because of the fact that we're trying to create a system that you can look at from the time, let's say, you get off work until the time you go to sleep. You can place your trade and let the profits roll in overnight, or the losses, because of course every trading system has losses. But the point of this is that we hope you win more than lose, and we're going to try to create that kind of advantage, or we make more with a bigger risk to reward ratio when we win than when we lose. So let's look at this. And on this specific trade on the 1 hour chart, we're going to take a look at this double top. The market has already met all of our other conditions. We then pull up into that zone, right? And we get what? As you can see here, we pull up into that zone. Let me get my drawing tool out. We get a little bit above the zone, not too much. It's a zone, guys. It's a zone of support or resistance in this case. It's not a specific area like a specific line on a chart. It's going to be a zone. And in this zone, we get a one top, double top right here. Because we have that double top, we went ahead and entered the trade after that double top, and we got hit with a little bit of a spread here. But once we entered that trade, I knew exactly where my stops and targets were going to go. If you're someone who's trading without knowing exactly where you're going to get out of the market, then you're doing something wrong. Like if you don't know that you're going to get out for a loss at a certain level and know exactly how much that loss is going to cost you, and you don't know where you're going to get out exactly for targets, at least for first targets, then you are just looking for trouble. You're looking to accidentally blow a bank account, accidentally blow a trading account, and possibly a bank account as well, depending on how much capital you have thrown into the markets. But that is something you absolutely have to have, is risk management. Risk management is a stop loss place, as in where am I going to get out of this market if I'm wrong, because you will be wrong no matter what. Everyone is. I'm wrong too. And a place where you know you're going to get out of the market if you're right. Along with that, you need to know exactly what you're risking every single time. Let's say you have a $1,000 account and you want to risk 1% of that account. You need to make sure that you're only risking $10 every single time that you place this type of trade. So that's something you need to prepare for with your risk management plan. We'll talk a little bit more about that here in just a second. But for now, let's take a look at this. So we have this double top for our stop loss placement. I did a very simple stop loss of 1 ATR above the highest point of the double top, which put me right here at 1.2603. Now, when doing this, what I like to do is make sure, this is another qualification for the trade, I want to make sure that looking left, there is not a level of structure support that gets in my way until I can have a 2-to-1 risk reward on the trade. So in this case, this was a major level of structure support out on the 4 hour time frame right here, this black line you see at 1.2461. This was a major level of structure support, and in order for me to even be able to place the trade, I wanted to make sure I could get a 2-to-1 risk reward at or before that level, because that's my first targets. My first targets are a 2-to-1 risk reward on this type of trade. So with that stop loss and my 2-to-1 risk reward set, I looked to the left and saw that there was no structure out on a 4-hour time frame. I'll show you that in just a second. Out on a 4-hour time frame, there was no structure levels looking left that could possibly stop this market and push it up before me hitting a 2-to-1 risk reward, another qualification of this specific trade. And in doing so, I ended up hitting my first target before I even woke up earlier this morning at a 2-to-1 risk reward for a positive 94 pips on this pound Swiss trade. So that's how you can take and implement this into your trading as well, but don't take it and implement it right now. Wait, there's another step. The process of doing this is quite simple. It's what I just explained, right? The process itself is quite simple, but the preparation before the process is going to be intense. Before we get into that, I want to share this with you as well. I just posted a post on Instagram, a short video clip about drawdowns. And what I want you to do is head over there and leave a comment under that post with the biggest thing you're suffering from when it comes to discipline. Some examples of this would be maybe you move your stop loss way too much and it causes your losses to be bigger than they should be. Maybe you risk a little bit too much of your account for every single trade. Or maybe you do something else along the lines of discipline, like not following your strategy or system that you really need help with. And what I'm going to do is I'm going to look at all of those comments, and the most popular one is one that I'm going to do a video on next week to help you guys with that side of your trading a little more than the technical side, help you on the psychological side of trading. And also, one lucky commenter, one lucky person that comments is going to get lifetime access to all of our paid programs. And don't worry, if you're already signed up for some of the paid programs, you'll get a full refund and lifetime access. So head over there and do that. And now we're going to talk about how you can validate this system in historical data, because that's the next step. What you want to do is make sure that you have this, but you have this strategy only on the pairs that it works best on, right? You want this strategy only on the pairs that is going to work best on. You want to have a set risk management plan, and in order to do that, you're going to need to test at least 100 examples of exactly what your rules are going to be. Like we just did, if your rules are trending on a higher time frame like the 4-hour, pulling back up to that level, double top on a lower time frame, set your stop and target, check for that 2-to-1 risk reward, all of that, all of those rules are objective, meaning that you can validate them. You can take them and test them through historical data. Once you do that, test them over 100 scenarios that specific case has happened. And once you do that, you will have an idea of a risk management plan you can use. The way you do that is you have an idea of the actual drawdown that you're likely to have while trading this specific strategy. So now you will have that once you go back through historical data and do that. And one more thing that you're going to want to do in this specific strategy, because the way we're doing this, we're trying to find strategies where you can make money overnight, right? You can place the trade before going to sleep, wake up, be in profit. In order to do that, what you'll do is on your higher time frame, you want to make sure that it's between the hours of you being home and going to sleep. So let's say you get home at 6 p.m. and you go to sleep at 10 p.m. or 11 p.m. Let's say 11. Well, if you get home at 6 p.m. and you go to sleep at 11, what you want to do is make sure that you have that pointed out on the chart. So in this case, it would be something like this area right here is when you would be awake, looking at the chart, and capable of actually placing a trade. So with that being the case, you would only be testing in this area, because if something comes after that, you're asleep and you can't trade it. If something comes before it, you're at work. There's no way to trade it. So that's another little thing you'll have to throw in when it comes to testing and validating this strategy. Try 100 instances where all of this lines up. Yes, it will take you time. Remember, the preparation is key, but the preparation is key in everything in life. Do you think a football player in the NFL was capable of creating that kind of talent without any preparation? And if he's in the game and takes the football for a 100-yard kickoff return, did he do that with no preparation? Of course not. Just like anything in life, the preparation is going to be much harder than the act of actually the process itself. Abraham Lincoln is famous for a quote he said, and that quote was, "If a man asked me to chop down a tree in 4 hours, I would spend the first 3 hours sharpening the blade of the axe." So you see, in that same sense, you need to spend your first 3 hours sharpening your blade, as in doing that preparation, the back testing, and all of the risk management plan, creating the full trading plan. That's what's really necessary in order to create real success. But now you have an idea of a strategy you can use and actually start testing. That's what I wanted to do in this video, and also give you a little bit of the how-tos on back testing it yourself as well. Now what we're going to do is actually take a look at a couple of other zones we pointed out this week in the Pro Trader report. I'm going to talk you through a little bit of how we pointed those zones out and talk you through exactly what's happened since then. So first off, let's head over to the pound dollar. This is the first one I want to look at. And in the Pro Trader report that I will put to the left-hand side of your screen, I hope I'm pointing in the right way, to the left-hand side of your screen, we pointed out an area. Let me drop this back to the daily chart. On the daily chart, we pointed out an area between 1.2524, which you can see on the picture now, and 1.2455. And in this area, we said that we were looking for possible long opportunities out of this market because of previous structure. This is how powerful structure can be. So if you master structure, you're going to be able to actually trade with a lot more accuracy than you are right now. And mastering structure is something that took my trading to the next level as well, and that's helped hundreds of our other clients. So in the PTR, we sent this out as a trading alert. And as you can see, since then, the pound dollar has risen more than 212 pips from that area. So an amazing gain there out of the pound dollar. We also sent out an alert on the pound New Zealand and on the pound yen, and actually it was on the pound yen, excuse me. And here on the pound yen, you can see the market came down into our Pro Trader report zone. It's called an OTZ zone. Optimal trading zone is what it's short for. And from this zone, we had a nice rise of over 180 pips from this zone as well. So really good scenarios of trading created by mastering levels of structure. And I'll show you those as well on the Pro Trader report right here. So here we have the pound dollar and also the pound yen, where we pointed out those zones. And if you're interested in getting these Pro Trader reports every single Monday to help with your own trading and your own mastery of structure levels, along with a full training course that explains in more detail how we point out these very accurate levels of structure, then feel free to check out the Pro Trader report in the description below. If you want some more advanced trading than that, then we do have the EAP training program as well, which has helped hundreds of traders around the world improve their trading. If you've been a part of either of those programs, feel free to comment down below and let me know what you think so far. And finally, if you want some free education, make sure to click the link in the description labeled free training to get your hands on some free strategies. We go over a little more detail on in that as well. So that has been today's video. I hope it's been helpful. I hope it creates a little more profits in your trading. I wish you the best of luck in all of your future trades, and I will talk to you in the next video.